The South African rand is in trouble. The currency has been facing significant challenges over the past few years, but recent developments have pushed it to new lows. It recently hit a record low of 25 rand against the British pound. This is a significant milestone that has caught the attention of economists and investors alike. This is a big deal. It means that the rand is losing value at an alarming rate, which can have far-reaching consequences for the South African economy. When a currency loses value, it can cause problems for the economy. Prices for imported goods can skyrocket, making everyday items more expensive for consumers. This isn't just about the pound. The rand is also weak against other major currencies like the US dollar and the euro. This broad-based weakness indicates deeper issues. This weakening trend has been happening for a while. Over the past decade, the rand has steadily lost ground against most major currencies. However, recent events have caused the rand to plummet even further. These events have exacerbated the already existing downward trend. So, what's going on? Why is the rand performing so poorly? Understanding the root causes can help us grasp the full picture. There are a few reasons. International trade tensions, domestic political instability, and economic mismanagement are all playing a role. And negative market sentiment are all contributing factors. These elements combined create a challenging environment for the rand. Let's take a closer look at each of these issues. By examining them in detail, we can better understand the pressures facing the South African rand and what might be done to address them. Remember when everyone was worried about a trade war? Well, it's happening. The fears that once seemed distant are now a reality, affecting economies worldwide. The US and China, two of the world's biggest economies, are locked in a bitter trade battle. This conflict is not just a series of isolated incidents, but a prolonged struggle with far-reaching consequences. They keep slapping tariffs on each other's goods, escalating tensions and making it more expensive for businesses and consumers alike. The US has imposed heavy tariffs on imports from China, targeting a wide range of products from electronics to clothing. China has retaliated with tariffs of its own, hitting American agricultural products and manufactured goods. This trade war is creating uncertainty and volatility in global markets. Investors are on edge, and stock markets are experiencing wild swings. South Africa is feeling the effects. The country's economy, already fragile, is being further strained by the ongoing trade tensions. The country relies heavily on trade with both the US and China. Disruptions in these relationships are causing significant economic challenges. As these economic giants duke it out, South Africa's economy is taking a hit. Businesses are struggling, and the average citizen is feeling the pinch. It's not just global issues affecting the rand. South Africa has its own internal problems. The country's political landscape is unstable. The governing coalition is facing internal tensions. These tensions were exacerbated by the recent budget. The 2025 budget included a controversial VAT increase. This increase has been met with resistance from some members of the governing coalition. This internal strife is causing uncertainty and making investors nervous. When investors get nervous, they pull their money out of the country. This capital flight puts further downward pressure on the rand. Section 4. Market Reactions and Analyst Insights. The markets have reacted negatively to the rand's decline. The Johannesburg Stock Exchange has experienced significant losses. Investors are selling their South African assets and looking for safer havens. Economists are sounding the alarm. They're warning of potential inflation and even a possible recession. The weak rand makes imported goods more expensive, which could lead to inflation. At the same time, the uncertainty and negative sentiment are dampening economic activity, which could tip the country into recession. Section 5, the future of the South African economy. So, what does the future hold for the South African economy? It's a precarious situation filled with both challenges and opportunities. The nation stands at a crossroads where the decisions made today will shape the economic landscape for years to come. The combination of international trade tensions, domestic political instability, and negative market sentiment has created a perfect storm. These factors have led to a volatile economic environment, making it difficult for businesses to plan for the future. The weak rand is a symptom of these deeper problems. It reflects the lack of confidence both domestically and internationally in the South African economy. This devaluation affects everything from the cost of imports to the purchasing power of everyday citizens. Unless these issues are addressed, the South African economy is in for a bumpy ride. The road ahead is fraught with obstacles, and without decisive action, the situation could deteriorate further. The government needs to restore confidence in the economy. This involves not only stabilizing the political climate, but also implementing policies that encourage investment and growth. It needs to address the political instability and implement sound economic policies. These policies should focus on sustainable development, job creation, and improving the overall business environment. Otherwise, the Rand will continue to weaken and the economy will suffer. The future of the South African economy depends on the actions taken today to build a more stable and prosperous tomorrow.